We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Bob Moriarty, founder of 321 Gold and 321 Energy. He's was also a Marine Corps fighter pilot in Vietnam. Thanks for joining me today, Bob.
Tom, it's always a pleasure. I just wish we had something interesting to talk about.
There never seems to be a lack of that, but if my memory serves me, I think that we actually started the last show by you saying that.
Yeah. Well, I didn't mean it last time. I mean it this time.
You know, Bob, one of the things that you've told me before that's been running through my head for the last couple of days is that all debt gets paid. So how does this apply to the current situations that many banks find themselves in?
It's not actually the banks that find themselves in this situation. It's actually the Federal Reserve. Three banks collapsed. You had Silvergate, and then you had SVB, and then you had Signature in New York. So the Fed comes out and says, okay, we're going to bail everybody out. Okay, we're going to pay all of the depositors 100% of their money. And they came out and they said, okay, that's going to cost $200 billion, but the taxpayers aren't going to have to pay it. And that goes to your issue of, all debt gets paid. So the question has to be, where's the $200 billion come from if the taxpayers don't have to come up with it? Mm-hmm. And in the week, on Wednesday of last week, Silvergate collapsed. On Thursday, Peter Thiel told his companies, pull your money from SVB. They pulled out $42 billion. On Friday, SVB collapsed. And then over the weekend, the Fed said, okay, we're going to bail them out. And we put up this fund of $200 billion. That was 8 days ago in total. And now the figure is $2 trillion. And Credit Suisse is on the verge of collapse. This is going to make 2020 look like child's play. I am convinced it means hyperinflation because all debt gets paid. So the Fed has effectively committed to printing $2 trillion in a week. And I don't think that's ever happened before in history. You would have to go back to Weimar, Germany in 1922 to have that kind of money printing.
Didn't we end up printing, $6 trillion for the first COVID relief package?
Well, we did, but I think the total was a lot higher than that. If you go back to 2008, they did the same thing then. It was a $200 billion program or $500 billion, and it ended up being trillions. The one thing that you can count on with the government is anytime they tell you something, they're lying to you. So if they're admitting $2 trillion now, it's got to be more than that.
Kind of like when Janet Yellen says for people not to panic, right?
Did you see the clip of the meeting of the people at the Treasury? It was on Twitter. There was a meeting of the board of people from the Treasury, and somebody said, we want to make sure the public doesn't learn about this, because if they learned about it, they would panic. And strange enough, when Janet Yellen says don't panic, I think panic's a really great idea.
So, Bob, do you think the intricacies here are really worth understanding? It seems like it was more of a long-dated bond issue that they couldn't get liquidity on, or there were these regulations that would discount the bank if they did sell those bonds. And how does this affect the bond market?
We need to step back a little bit and say what is the overall cause. And that goes back to the $300 trillion in debt. And we've talked about that before, and everybody that I've ever mentioned it to agrees $300 trillion can't be paid back. So if $300 trillion can't get paid back, what's going to happen? And the answer is quite simple. The situation, the system has to blow up. And we don't know exactly what's going to blow it up, but we know something's going to blow it up. And I'll give you one figure that I've never heard anybody else say, which really surprises me in light of Signature Bank and SVB and Silvergate and the 200 billion there and 2 trillion here. In the last 2 years, $2.2 trillion has evaporated and gone to money heaven from the cryptocurrencies. Now, somebody thought that was real money. Of course, I've disagreed. I think the whole thing is fraud. I think it's always been fraud. I think it's going to zero. And I could be wrong. But $2.2 trillion has already disappeared. And that has the effect of quantitative tightening, because that's $2.2 trillion that people can't spend anymore. Okay, the money just disappeared. So I don't know what's going to happen from here. And quite bluntly, I don't think anybody knows what's going to happen from here. But the system has to blow up because it simply cannot function the way it is. We've been printing money. The immediate cause of SVB does go back to the bonds. And they were buying bonds, 10-year bonds, say at 145, and they dropped to 110. And then all of a sudden they had a run on the banks, and the depositors wanted their money back. When they put the bonds up for sale, they were going to take a big loss. And again, most people don't know this, but about 2/3 of the value of derivatives, and I've heard a lot of people quoted as being $2 quadrillion, about 2/3 of the value of derivatives are interest rate derivatives. And that means SVB had the option of hedging their bond portfolio, and they didn't take it. And the reason they didn't take it is that a derivative, interest rate derivative, when you spend the money, it's an insurance policy, but it's not an insurance policy that you can carry long term. It's an insurance policy that you have to write off immediately. So they could increase their nominal profits by not using interest rate derivatives, and that's what they chose to do. However, the losses were very real. And for $200 billion to disappear in 2 days, that's really impressive. I was really impressed.
Mm-hmm. So when we think about that, let's say that the initial reaction of exactly what you said, that $200 billion disappearing in 2 days, one would think that is deflationary, right? But you made the point to me before we hit record that this is, highly inflationary, if not hyperinflationary. So why, when we step back and look at that bigger picture, is it actually much worse than $200 billion just disappearing?
Okay, what we're going to have is both inflation and deflation at exactly the right time. Everything that was puffed up by the free money, and including, the portfolio of SVB was really a joke, okay? These were not serious companies. They were throwing money at everybody that was woke. It was never designed to be a profit-making venture. It was just throwing free money at people. Well, that's a good deal as long as you got free money, but as soon as you have to pay for money, it becomes a bad deal. Things that were puffed up since 2020, like real estate, like bonds, like the stock market, they are going to deflate. I'll give you an analogy. In 1929, September 1929, the Dow peaked in the first week of September. From September of 1929 till July of 1932, it declined 89%. From July of 1932 till June of 1933, it went up 150%. So can a stock market or a commodity decline 89%? The answer is yes. Mm-hmm. Could silver decline 90%? Sure, it did. From 1980 until 1985, silver went from $50 an ounce to $5 an ounce. And if you want to make a profit, you hedge those kind of bets. If you don't care about making a profit, and that's where we are now. We're playing Monopoly, and the bank, whoever's running the bank, is just printing off money. It's not real money. Let me give you another factoid. From 1929 to 1932, the banks, the stock market collapsed. In May of 1931, in Austria, a bank called the Credit Anstalt Bank collapsed. That was in May of 1931. Roosevelt, of course, was elected in 1932, and he took office in March of 1933. Between 1931, May of 1931, and March of 1933, the banks declined across the board all over the world. And the very first thing that Roosevelt did was to close the banks, temporarily close the banks, and a third or a half of the banks never reopened. There was actually only one bank in the entire United States that didn't close the doors, and it was in Nevada, and the guy that was running the bank said, the rules say that once we close the door, we're closed until the government reopens us. So we're not going to close the door, and that's exactly what they did. But the first thing the government did after the banks was pass the Glass-Steagall Act. And that was a very important bill because it separated the function of banks into two categories. One was banks acting like banks where they take deposits and they make loans. And the other was banks acting like casinos. And the Glass-Steagall Act said you can't do that. That's what we really need to do now. And it scares me that nobody's talking about that, because the incipient problem that we've got is the banks think they're casinos, and the Federal Reserve and the Treasury are backstopping their stupidity. That has to be inflationary, because they're just going to print money like a drunken sailor.
Do you think let's say the cause of banks acting like casinos like that, as you're saying, Bob, is more so because of this environment of basically free money that they have enjoyed for so long?
100% has to be. The federal
because really
you can do anything.
Because really it's just forced everybody up the risk curve to try and find some yield, right?
Well, it didn't force them up. I totally disagree with the management of SVB. They knew 2 years ago that the Fed intended to increase interest rates, and they didn't do anything to hedge that. And so far, that's exactly what it's done. Now, we've got another Fed announcement coming out 22nd, and that's going to be very interesting, because if they raise interest rates another 0.25% or 0.5%, that's absolutely, we're going into hyperinflation, and the system's going to go down. Now, the Fed's worked itself into a corner. They gave themselves too much free money. The idiots in the bank just spent money like drunken sailors, and now it's time to pay the price. Nobody wants to pay the price. Now, let me give you some really bad news. If you think the United States banking system is bad, Europe's banking system is 10 times worse, and Japan is 100 times worse. The world is functionally bankrupt, and nobody wants to admit it. Now, whether it happens this week or next week or the week after that doesn't make any difference, but we need to regress to the mean, and that means a lot of pain on a lot of people.
So, exactly in that vein, Bob, how big of a deal is it that the Saudi National Bank, for example, said that it won't be able to provide any financial assistance to Credit Suisse? From what I was reading, this would have put them over the 10% stake regulation rule, so they can't even if they wanted to.
There's a lot of things going on geopolitically that are part of this issue. Now, I believe, and until I'm proven wrong, I'm going to continue to believe the whole Ukraine thing is not really about Ukraine versus Russia, or NATO versus Russia, or the United States and NATO versus Russia. I think it's the debt-based financial system of the West and a resource-based system of the East and the South. Russia and China clearly understand that you don't want to be in the dollar and you don't want to be in paper assets. But China just got Saudi Arabia and Iran to come to a peace agreement of sorts, and they've been bitter enemies for religious reasons for a lot of years. But that means China just took over as the big dog in the Middle East, and that's a big deal. The Saudis are really kind of flipping the bird at the United States and NATO and the EU and said, we're not going to buy into your nonsense any longer. So there's some interesting things going on. I mean, were you aware that Mexico has applied to BRICS?
I did hear something about that, yeah.
Yeah. That's monumental. Now, if the Ukraine war is a conflict between the United States and Russia over who the big dog is, people or countries are deserting the American allies, and they're signing up with the Russians and the Chinese. And that's enormous. Now, if France or Greece or Italy, if all of a sudden they applied for BRICS, okay, the world order will have been changed. But one of the comments that I've made, and I think I've made to you before in the past, is in the next 6 months, we're going to have more change than we've had in the last 50 years. And I'm absolutely convinced that's true.
Mm-hmm. Yeah, it just seems that the pace of change is just absolutely incredible. And, as you said at the beginning, there's never a lack of interesting pieces to consider here. And it is really difficult to be able to keep up on all of this. But do you think that when at the beginning of the conflict, the US seized a bunch of Russia's foreign assets, I think it was something like $30 billion worth or whatever it was, or
300 million.
Okay. So it wasn't even that much. So does that play into everybody else's move to, shore up their assets when they see that the foreign reserves that Russia held can just be confiscated just at the drop of a hat like that?
The answer is yes. And the United States did exactly the same thing to Iran, and it did exactly the same thing to Afghanistan. And that's warning, and that's saying if you have money in the international system where it could be seized by the United States, that's something that could happen. Now, my problem with the United States seizing that money is there is no basis in the international law for that being legal. Okay, you may agree, and the Russians are horrible people, and Putin is Satan, all of which might be true, but there isn't any reason, there isn't any international law that supports that. I'll give you another example. there is no international support or law or act of the UN for the United States being in Syria. The United States said, we're going to go into Syria and we're going to steal their oil. So I actually had a nephew who was working with special forces in Jordan, and they were training the terrorists that were going into Syria to attack the Syrians. Now, I don't know what the United States, the strategic interest in Syria is, and it's a bit scary to me. The United States got 850 military bases all over the world, and they act like international law doesn't apply to them. And quite bluntly, it has to apply to them. You can't have a rogue nation, and that's what the United States has turned into. But going back to Saudi Arabia, if Saudi Arabia wanted to invest money in Credit Suisse, they could figure out how to do it. Mm-hmm. So they just said, screw you, and the horse you rode in on.
Bob, you've called for a new financial system based upon natural resources. And as you said, it seems like the East and parts of the global South are moving towards that. So do they implement this new trading currency at an opportune time? Like, does it happen overnight, or does it start to gain acceptance over time?
Because they can't clearly define it, what you have is you have two competing financial systems. Now, it's clear that the debt-based system is collapsing, but it's not clear as to what a good replacement would be. But the fact that Russia and China are buying so much gold, I'm absolutely convinced they're doing it for a reason, because they understand that gold should be the basis for that. I think that an honest financial system is necessary. You can't have an honest economy without an honest financial system. And we certainly see it today. There is so much fraud in everything the West is doing now that it's just disgusting. And Russia and China said, we want to change that. And a lot of people are buying into that. And I happen to believe that if we go back to the period of 1825 to 1900, that was a period of the greatest financial advance in world history. Brazil was on a gold standard. Mexico was on a gold standard. The United States was on a gold standard. Canada was on a gold standard. Germany, France, Italy, everybody was on a gold standard. And then you can have an honest economy. Now, are there flaws to a gold standard? Yeah, of course there are. But at the same time, the concept of a resource-based system makes all the sense in the world, but trying to define it is difficult. So I think that it will proceed suddenly or slowly and then suddenly. Mm-hmm. But the United States and NATO are absolutely committing suicide financially, morally, and every other way. It's gotten to the point where listening to the White House press briefings, you think you're listening to a comedian on television.
Bob, if we could, let's make some of those ideas explicit. You said that the having a gold standard has some inherent problems with it. So what would some of those problems be? Okay,
people are human beings. And because they're human beings, they go from being absurdly optimistic to absurdly pessimistic. There are financial cycles that repeat and have repeated for thousands of years. And I've written books about this, and I'm a big believer in sentiment. If you can measure sentiment, you can predict human behavior. But when you have a financial system that's not grounded in real assets, it's not grounded in real money, you have magnified the effects of being too optimistic or too pessimistic. We were talking before we started recording about the number of people who had predicted SVB as being a great investment, including Jim Cramer, and he had gotten a stamp of approval by the Federal Reserve and the Treasury, and it had passed all of the stress tests. How does it go from being acceptable on Wednesday and collapsing on Friday unless there's some inherent problem? And if there's an inherent problem, why didn't somebody out of the 30,000 idiots working for the Federal Reserve, why didn't somebody say, oh, by the way, if we lower interest rates or if we raise interest rates, we lower the value of bonds and somebody's going to get hurt? And nobody was saying that.
Mm-hmm. Well, maybe not externally, but you would think that somebody would have understood that.
You would hope that somebody would understand that. But other than a few people like you and me and people on independent media, certainly nobody with the government got it.
Mm-hmm. So, Bob, I'd like to drill into a little bit more of those intricacies within the banking system, if you wouldn't mind. Will the FDIC be able to cover these losses from a bank, or if it becomes more systemic and that contagion keeps spreading, does the FDIC have the ability to keep backstopping?
Yeah, of course they do. They just run the printing press.
Mm-hmm. That's as much as you're going to give me for thinking about the FDIC?
No, that's exactly what they're going to do. You have two choices. You could say, we're going to make people pay for their mistakes, or you could say, oh, God, we don't want people paying for their mistakes. We'll bail them out. Mm-hmm. When the Fed bails people out for being stupid, there is no limit to stupidity. So if there's no limit to stupidity, there has to be no limit to money printing, except the number of trees that you can cut down and throw into the hopper and make into paper. Mm-hmm. But the Fed has said, we're going to bail out stupidity.
So do you think it matters for the average person to go and look and try and understand the solvency of the bank that they're dealing with at this point?
I don't think the average person has any ability, and certainly I don't have the ability to judge that. I would just say people need to understand that in every investment you make, there is potential risk, and this is not a time to be making risky investments. Some things like cryptocurrencies and the stock market, I think that anybody that's investing in them now has lost their mind.
Mm-hmm. And in some ways, we have to think about putting money in a bank as an investment, right?
Of course, it's an investment. And sometimes sitting on a stash of cash underneath your pillow happens to be the safest place you can keep it.
Until you get into a hyperinflationary situation.
Well, it's funny you said that, because I was thinking about that. Cash, of course, is an investment. And if we get into hyperinflation, I'm convinced we are going to get into hyperinflation. But I also believe that you could see what's happened with the price of gold in the last week and realize that a lot of what people have been saying for years and years and years, I have been maintaining for at least 25 years, every time I've ever spoken publicly, that gold serves two functions. One, as insurance policy against financial chaos, and two, as an investment. Now, I don't spend any time thinking about how much I pay on insurance on my house, mm-hmm. or how much I pay for insurance on my car, because I don't want to collect. So I own physical gold and platinum and silver, and I don't pay any attention to the price because I didn't buy it to invest. I bought it to invest against financial chaos, and we could certainly see the financial chaos today. Alternatively, you can invest in real things, and that's natural resources in terms of stocks. Stocks are not paper assets. Stocks are actually fractional ownership of very real assets. And I think that investing in real assets makes a ton of sense, especially when you've got people like Putin and China saying they want to go to a resource-based economy.
Mm-hmm. That's actually something I did want to ask you, Bob, is, owning shares in companies or having money in a brokerage account, is that, a safer place to be invested if we're thinking about having shares in companies that are resource based?
Yes and no. And I'm going to put that in. If you buy stocks on margin, you don't actually own it anymore because those stocks are actually pledged against the loan. Mm-hmm. So if you own stocks on margin, you have introduced counterparty risk that didn't exist before. But when you don't have stocks on margin, those are fractional ownership of very real assets. And I think over the next 10 years, that'll be very valuable. Going back to 1929, when the market peaked in September of 1929, it took until 1954 to surpass that. So I think we've seen the peak in the stock market. It could be 25 years before we get there again.
Mm-hmm. Bob, as you were saying, that gold and silver have really seen some major volatility since this whole situation has come about. And obviously this seems like a flight of safety for capital. Is this adding to fuel for the bull market for the metals?
Yeah, of course.
So is this just another kind of piece of the puzzle, as you see it, that was in some ways inevitable?
And the answer to that is yes, mm-hmm. Absolutely.
So one of the only other things that I wanted to ask you, Bob, is that since we've seen so many changes since the start of the war in the Ukraine, Russia, has had a lot of changes. We see now China's Xi is now on a world tour to speak to many leaders. Do you think that we're closer to a resolution or a larger conflict?
That's a really good question. A larger conflict would be World War III. The United States doing everything in their power to guarantee World War III. I will point out we have no strategic interest in Ukraine. Frankly, I don't give a shit who controls Ukraine. I don't know anybody who does give a shit. Okay, it's their country. Mm-hmm. Russia, I wrote a piece a year ago and I said that sanctions were the biggest geopolitical mistake in world history. And I absolutely stand by that. The sanctions have been a total disaster for Europe. Russia was hurt a little bit, but they were forced into bed with the Chinese and they were forced to change their partners. Why Europe would take such an antagonistic approach to a country that is literally their food supplier and their energy supplier is beyond me. There have been 10 sets of sanctions, and if you have to repeat something 10 times, what you're doing doesn't work. Mm-hmm. And it's amazing to me that Europe allowed the United States to commit the biggest act of terrorism in history, which is what bombing Nord Stream was, and get away with it. I think at the end of the day, the war in Ukraine, it should have ended literally in the last month or two, but it was an extremely warm winter in Ukraine and Russia. So Russia is prepared to roll over Ukraine, but they couldn't do it because of the mud. Mm-hmm. When it dries out in May or June, there will be a resumption of the war. If it doesn't, I mean, quite bluntly, Zelensky's having conflicts with his top general. The Ukrainians have lost somewhere between 500 and 600,000 killed and wounded. And the top general started to realize, wait a minute, this is really stupid. Zelensky has insisted they keep pouring troops and materials into the defense of Bakhmut. And the general said it was really stupid. The Russians were playing to the Russians' game. So from a tactical point of view, Ukraine's lost. They started the war with 1.2 million troops, and they've lost the use of about half of them. 30% of their economy has been totally destroyed. There's 8 million refugees in Europe. That's going to create a lot of problems. So Europe has done some things that are incredibly stupid, and nobody in Europe is standing up and saying, hey, wait a minute, why are we doing this? I am dismayed at the quality of the leadership in the United States and in Europe, because I can't think of very many people that I would follow for anything.
Yeah, that makes sense. But where do you think that critical mass comes where enough people stop taking orders?
When all the banks close, there is going to be this gigantic wake-up call that says, we kind of screwed that up. I don't look as a total collapse as a bad thing. I actually look at it as a good thing, because we know it's going to come, okay? Nobody that I've ever talked to disagrees about it's coming, but we're going to be able to prolong it. If you prolong it, you just make it worse. There will be a wake-up call. I am astonished at the propensity of Americans to consume propaganda and talk about things that just don't make any sense whatsoever. It's really scary to me. But the United States has 80 years as the world's reserve currency, and it's time for the Chinese or the Indians or the Russians or somebody else to take over. But again, we're going to have more changes in the next 6 months than we've had in the last 50 years.
Mm-hmm. Like you say, very slowly and then all at once, it seems like.
Yeah. John Rubino said that. It's very good. It's very smart.
Mm-hmm. One of your colleagues, Bob, lays a lot of these things out every year. Dave Collum, who I've had on the show before, writes a year in review, and you've recently helped him publish that, right?
I did, and it's an interesting story. Dave actually came to us in 2008, and he sent a short year in review, and I'm talking about 3,000 or 4,000 or 5,000 words, and said, would you like to publish this? And Barbara and I read it and said, yeah, this guy's a great reader or a great writer, and we would be thrilled to. And he said, well, look, I don't know. I'm a chemistry professor at Cornell University, and I don't know what the reaction of the liberals in the department would be. So I'd like to do it under assumed name. Mm-hmm. Now, in 2009, he went to Peak Prosperity and said, hey, would you guys like to post this? And he started off fairly short, 5,000, 10,000 words. And he got up to the point in the 2022 was so long that he had to publish it in 2 different PDFs. And I'm a speed reader. And I read for about 30 minutes. And I thought, this really belongs in a book, okay? Not just a URL on a website. But I went to him. I'll show you the book, okay? I went to him and said, Dave, I think that should be a book. And I've got a guy who's very good at formatting, and I'll put the thing together for you. It's still your book. You get all the money from it. Dave Collum is the single best investor I've ever talked to or read about. And I know there's lots and lots and lots of billionaires there and people who have made tons and tons and tons of money. But Dave is practical. He's upper middle class. He invests in stocks. He invests in bonds. He invests in gold. He invests in resource. And he changes it based on which way the wind blows. And I believe what he told me was that in 17 or 20 years, he's only had a reduction in total value 1 year. And that's better than anybody I know. So reading the book, I think it's amazing because he discusses everything. And he certainly is going to have a lot to write about this year. Okay. Next year, the book's going to be that thick.
Yeah. Well, I think I remember him saying before that he might not even be able to get through 2023 because there's so much happening to actually be able to write it.
It's a little scary, and I would highly advise you should have him on. He's there. There's a few guys who are so eloquent and so thoughtful and convey their message so effectively. John Rubino's another one. I just love listening to John Rubino. But Dave Cullum's just a really interesting guy, and he's got an interesting take. And it doesn't make any difference what you believe. He will find something that offends you.
Well, that's maybe a good sign that he's able to find any counterpoint to be able to piss people off, I guess.
Well, I've got opinions on everything, and I even disagree with myself sometimes. But Dave Cullum's book, I'll show you the picture again. It's 2022 Year in Review, and it's on Amazon, and it's like $16 or something like that. And it's one of the most valuable books I've ever read. And I was really proud to be able to participate and help him out with it.
So when we're thinking about, Dave being one of the best investors that and let's say we look at the ratio of the gold price to, let's say, the ownership of the miners, the price of GDX, for example, does this time really make you want to invest in gold stocks, or does it seem like that it's very undervalued for a reason?
Well, actually, the concept of undervaluation for a reason is a flawed concept. In one of my books, I list about 10 rules from Moriarty. One of them is stocks go up, stocks go down. I won't identify the people. There are certainly people that you're aware of who you've interviewed, okay, who act as if, for practical reasons, gold and silver should go up every single day, and resource stocks should go up every single day. And I'll be real candid, that's absolute bullshit. Stocks go up and stocks go down, and sometimes they're cheap and sometimes they're expensive. And what I advocate is, if you will buy stocks when they're cheap and you'll sell them when they're expensive, you can make a lot of money. The junior resource stocks, I did a study on the stocks I owned one year, and there was a 290% difference between the low of the year and the high of the year. Now, if you've got a 290% move in a stock in a year, if you can't clip 25 or 50% off in there somewhere, you're making a mistake. Instead of trying to find the 10,000% returns, which do occur now and again, if you'd go after 25% a year or 50% a year, you could do very well. And that's why I highly advocate reading Dave Cullum, because his arguments for why he's in bonds or why he's in stocks or why he's in the GDX are very rational, very logical, and very profitable. And that's what people should be doing. I don't invest to prove how smart I am. I invest because I want to make a profit.
That's a great way to put it, Bob. We've covered a lot of ground here. Is there anything else that you think is worth mentioning before we wrap up?
Next week scares me. Okay. And I mean that sincerely. Every day I go to my computer and there's something else. I go, oh my God, they didn't really do that. And of course they did really do that. When I read about JP Morgan today, Fed loans will provide $2 trillion worth of liquidity. What are they going to say a week from now or 2 weeks from now or 3 weeks from now? We are in scary times. It's time for people to educate themselves. There's some really great sources of information on the web. there are no gurus and there's no experts, and I'm certainly not one. But it's a good time for people to take responsibility for themselves, because if they think the government's looking out for them, that ain't going to happen.
Yeah, that's a great way to put it, Bob. Take responsibility for yourself. I've had a couple conversations recently where that's exactly what the situations and times that I have felt that are most important in my life, and the people that I respect the most are the people that take responsibility for their finances, for their health, whatever it is. They don't rely on anybody else to take care of it for them. And I think that's excellent advice that you just gave there.
Thank you.
Of course, you're available at 321 Gold and 321energy.com. Anywhere else you'd like to point people to? Your books on Amazon?
On Amazon, I've got about 10 books there, and I range everything from short 2-hour fiction to serious books on investing, commentary on the world in general, commentary on my background in the military. I'm not a great writer like John Rubino or Dave Collum, but I'm certainly an interesting writer, and I've written about a variety of things. And if you go to Amazon.com and put in Robert Moriarty, all you have to do is look at the reviews, and it'll give you an idea of how good the books are. But I'm quite proud of the books that I've got, and I made them available. I think all of my books that are in electronic format, I think they're all 99 cents.
Excellent. All right, Bob. Well, I appreciate your time today, and we'll have to catch up with you maybe at the end of next week.
Okay, my friend. It's good talking to you. Thank you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.